Yes, hello and welcome to the Business of Property podcast. I'm Stuart.
And I'm Simon.
We're both property people running our own business, and this podcast is just us chatting, as we often do, about anything and everything property. For today's podcast, we thought we'd do something a little bit different. First, because we thought it'd be fun for us and hopefully it would be interesting for people to listen to. And that is, Simon has found a property of interest that he may or may not invest in. And we thought, rather than have the chat before the podcast, as we often do, about the numbers, what he's looking at, what he would think about doing with it, we thought we're going to do it live. We'll just hit the record button and we'll talk through it. Hopefully, it's a format which works. Either way, if it does, if it doesn't, please do reach out to us. You can reach out to us via thebusinessofproperty.com on the contact form or any of our other channels, which will be in the podcast show notes. So please do let us know. We'd be very grateful to hear from you. So, Simon, the first question is, you've found a property and you'll give us a little overview of that, I'm sure, but I'm interested, what is the very first thing about the property that makes you click on it rather than continue to scroll when you're looking at a property? Why this property did you stop?
Oh, that's really an interesting question, because this is probably not the primary type of property that I would normally stop and look at. So I'm normally looking at 2 or 3 bed houses, ones in appropriate areas, ones that are of an appropriate price that I could potentially afford. And this property doesn't fit any of those criteria. So I think really what caught my eye for this property is just a combination of factors. So I thought, ooh, that's kind of interesting. And then I dug into it a bit more and thought, ooh, it really is quite interesting. And hence that was how my interest built, having started looking at it. So this property is listed as a 6-bedroom property. So I'm often sort of curious about bigger properties, just not because I'm looking to invest in them, because I generally can't afford them, but because I like properties and I like looking at nice, interesting properties. And a 6-bedroom property is probably going to be kind of interesting. You don't get very many of them. So yeah, I think that's probably what sort of piqued my interest. It probably wasn't an initial look with investment in mind, but digging in, I came round to the idea.
Okay, so you've talked about a combination of factors. So let's have an overview. It's a 6-bed. Give us a little bit more detail around the property itself, location, type, etc.
Okay, it is a detached house. It's in Earlswood, so sort of southern part of Red Hill. People living in Earlswood will probably dislike me clarifying it or classifying it as part of Red Hill. But anyway, it's, as I mentioned, 6 bedrooms. And looking at the floor plan, those bedrooms are all big bedrooms. So it's a big property overall. It's been on the market since September. It was initially listed at 850,000. It's been reduced twice and is now listed at 750,000. Looking around the property, so through the photos and things, it needs some work. And I think 750,000 is probably still a bit optimistic, even though it's a big property. It's currently all one property. There's parking for 1 car outside the front, which is fairly important in this area because there is road parking, but it's busy. So yeah, I think that's sort of the background. Oh, I should say it's a relatively old house. So it's not new or not modern. If you look at the EPC rating for it, it's pretty bad. I can't remember off the top of my head, but I think it might be an F. So that would be a sort of a red flag for investment these days. But I think any investor on this property would be looking to make changes. So obviously you can improve the EPC along with that.
Okay. And what would be your intention with the property? What would you do with it once purchased?
So I think this property is sufficiently large that I don't think it would make sense as a single rental unit. However, perhaps you could split it into flats, was my thought. And I dug into this a bit, and as it turns out, there's an almost identical house next door, which is currently 2 flats. So I'm not the first person to think of this. And I think having an example right next door that has already been split, to me, suggests that you could probably get the planning permission. It would probably work out okay for that. And internally, it must be possible. Now, that property is split into 2 flats, as I mentioned, and I would probably want to get 3 flats out of this property, I think, in order to make it work financially. In fact, I'm still not entirely sure it works financially, as we will come on to later, I'm sure. But I think to get close to working financially, it would need to be 3 flats, probably a couple of 3 beds and a 2-bed, hopefully. It's split across 3 floors as it currently stands. Well, actually, there's a cellar as well, but it's only a single room, and there's no natural light to it. So the main living accommodation is split across 3 floors. The top floor is only a couple of rooms. They're fairly big rooms, but only a couple of rooms. So I don't think you would be able to have a flat per floor. I think you'd probably have perhaps a ground floor flat and then 2 split level flats on the top 2 levels, something like that. But yeah, you need to get an architect involved to actually be able to do this properly. And unfortunately, I'm not such. But yeah, just looking roughly at the floor plan, I reckon you could squeeze 3 into it.
So just for the listeners' benefit, we'll put a link to this from Rightmove on the show notes so that you can have a look at this, because I think it's very interesting. This is why we hope this is going to be of interest. So I am looking at this live whilst we are talking, so this is new to me as well. And I would agree, in terms of the floor plan, certainly looks like there's a lot of space there. You know, you've got 200 and, let's say, 10 square meters, almost 2,300 square foot. So it's certainly a big house that you could get into. And in terms of value, what would you see the end value? Let's say you could get this, you do all the right things, you get the approvals, and we get the valuations in for 3 flats. What would your hope be?
I think I might be being slightly optimistic with these numbers, but hopefully not too out of touch with reality. So I would think that if we can get 2 3-bed flats and 1 2-bed flat into the space, looking at sort of comparables in the region, I reckon you could say 310 for each of the 3 beds and 280 as a value for the 2-bed. Maybe it would be slightly less, but if you finish it well, maybe it could even be slightly more. So I don't think they're unrealistic numbers to go for.
Okay, so we're actually looking, if all turned out really well, and we know the reality of property, but if it all turned out really well, you're looking at an end valuation of approximately 900k.
Yeah.
For the 3.
Yep, that's the numbers I came up with too.
Right. Now, drilling down slightly on some of this, my first question is the 750, as you've said, that still seems quite punchy to me based on the property type and the very, very quick. So appreciate you'll have done a little bit more due diligence than I am, but these are the sort of immediate questions that are coming to me, which is 750 still seems really punchy. Now, I've just had a very quick look whilst you were talking at sort of local area and sales. Now, a lot has changed in the last 2 years in terms of prices, but I did find I think it was a 5-bed that was sold in the summer of last year for about 510. However, that is probably the lowest value that I saw just on my very quick scroll. But it says to me there's probably a variable bit of pricing happening. So what had you looked at around that? Because obviously you've got the tools in PaTMa and everything else. What's your view on valuation?
So I think it's very hard to value a house like this because it's very big. There are other buildings that are the same around, but as I said, they've generally been split or not sold for a long time. So it's very, very difficult to get direct comparables. So I've based it sort of more on what I think could work in terms of sort of an investment scenario, and looking at that sort of more roughly with comparables in the area and obviously the general size of the property. So I've based my sort of financial forecast prediction figures, whatever you want to call them, on a purchase price of 700. And I think that that's probably still high. I would hope that you'd actually manage to get it for a bit less than that. But that's what I've sort of made. That's what I've used in my calculations. And they sort of just about work as a financial, as an investment scenario and from that.
Yeah. And then the other immediate question is, one thing I'm always wary of, having looked at similar things myself, is that the top floor, there are eaves, although I think there's one photo of the top floor, you can see that there is head height for a good proportion of it. But that would be my other immediate concern, is actually, would we be able to convert that into, a good floor space to get a third flat, that plus the element of the first floor that you were talking about.
Yeah, so the top floor is currently listed on the current listing as bedrooms, 2 bedrooms and a loft storage space, I think is what it's listed as. And as you say, from the photos, it looks like there are eaves involved, but not cutting off too much of the room space, hopefully. I haven't been to view this property, so I don't know for sure, obviously. So based on that, I was thinking that you would use that loft space as bedrooms still, and hence the 2 split level flats. So you'd have the living space for each of those flats on the middle floor, and then maybe one of the bedrooms as well, or a couple of bedrooms, and then you'd go upstairs for the just a bedroom or 2 bedrooms, depending on the flat, perhaps. So that's my thinking anyway. So hopefully you wouldn't have too much reliance on that top floor. There are windows up there. There is natural light, so that they can be bedrooms. And seeing as they're already listed as bedrooms, hopefully the structure and other requirements are there already.
Okay, so in an ideal world, you'd hope to get it for around 700,
or a bit less, hopefully. But
yes,
but yeah, I think looking at what it's actually worth, given that it's not an ideal state, it definitely needs work. Even just keeping it as a single home, I think really it would be less than that. But that's the number I've used in my calculations.
And in terms of rental, what would you hope to get for rental amounts per month, per annum?
As a whole, across the 3 flats, I think 3,900 per month. And that breaks down as 1,350 for each of the 3 beds and 1,200 for the 2 bed. These, I think, I think they are very realistic, and you might actually be able to get slightly higher than that if the flats are finished well and they have parking and things like that. So that's something else to mention, actually. Currently, there's a driveway at the front for 1 car. However, there is also a garden next to that. And looking at other properties in the area, they have converted more of the garden into driveway space. And there is actually that garden space, or the front of the house, is wide enough for 3 cars. So you could actually have 3 flats, each with a parking space. So I think that would increase the value both for sale and for rental, and obviously keep those extra cars off the road, which again might well help with planning permission too.
Yeah, just to clarify, as I flick through the photos, it's one of those where, even if you weren't converting, you'd have to replace kitchen and things, because it's, obviously hasn't been worked on for, let's say, at least 20 years, probably longer. So based on your rental figure, I would say lowball, then you're coming out at about a 6.7% gross yield. So does that hit your initial hurdle rate of something that you then would look into further?
Yes, definitely. I know you like looking at yield first, and I hardly ever look at yield at all, never mind first. I base mine a lot more on ROI. And yes, yield, I would definitely look at that, because I'm often looking at properties that actually have a yield of 3 or 4%. The ROI calculation that I've got on this, so that I've put together a brrr scenario.
You're not cold. You're just talking about buy, refurbish, refinance, rent,
yep,
ruminate.
Yep. Yes, indeed I am. So the idea is that you buy it on a shorter term finance package, a bridge of some description, probably, because you're going to be doing lots of building works to it, and standard mortgages don't like you ripping things apart. So you buy it on a bridge, hold it on a bridge for a while you do that work, and then once you finish that work, you can then get it revalued in its new form. So you can then move to a mortgage, pay back the bridge, hopefully get a bit of money back out of it, and then you can rent it based on that new mortgage you've got after the works. So the ROI that I've calculated is based on the money that you would have left after that mortgage at the end. And that comes out at just over 9%.
Okay, so you've got 9% return on investment. So you're talking about all of the costs that you'll have incurred to develop the property, less the mortgage.
That's an interesting one, actually, because you've got a lot more development experience than I have. So in my scenario, I've put in a budget of £80,000 to do the flat conversions. And I'm not sure if that's enough. It feels like quite a lot of money, but I'm not sure it's actually enough. So I'm going to put you on the spot, Stuart. What do you reckon? What would be your, off the top of your head?
Well, it feels like a lot of money because it is a lot of money. I'll take, 80K is a lot of money. I'm just thinking, so you'd need obviously 3 bathrooms, 3 kitchens, you've got planning cost, you've got architect cost. If I were doing this where I am, I did 5 bed with 5 en suite for less than that. So it does feel punchy, but to be honest, in the south, without going into the detail, I think it's probably, eye-wateringly going to be there or thereabouts, I would say.
I think reading between the lines, you're being too polite to say that I've vastly underestimated that.
Well, no, the first thing I was going to say was, if that's the number you think it is, at least add another 10K, because that's my experience is whatever you think it is, it's always going to be more anyway, because that's just how it works. And yeah, let's not get into the conversation around supply at the moment, but I think a kitchen that we were going to buy about a year and a half ago has increased by about 400% because of the dearth of timber in the world, or the inability to supply it. So we've got that kind of storm happening. But it can't be a million miles away.
You've convinced me to increase it. So while you've been talking, I've put it up by 20K. So there you go. There's now financial forecast built with refurb costs or building costs of 100K in there. So that comes out an ROI of 8.25%. So
yeah,
still pretty good ROI.
Yeah, and the challenge is with all of these properties. I mean, it doesn't look too bad. It looks like to me, it looks like a kind of like a 50s type building. I'm sure it's a lot older than that. But what I looked at previously, I bought a property that was, say, 200 years old. Every time we moved something or removed a chimney breast, something else came up. We removed a chimney breast and then the roof needed repairing. It's the unknown unknowns, to coin a phrase, that are the ones that get you. It's not the known knowns. You're like, okay, the bathrooms, the kitchens, the reformatting of the footprint, internals is okay. It's just, let's say you want to move an eave back and then you remove that eave and then you find you've got a pigeon nest or whatever it's called. They're the bits that tend to suddenly add 10% to what you thought was going to be a reasonable cost.
Yeah, quite. Good to have a bit of a buffer in there.
So I'm interested to know, what would your next step be in terms of, if you were to pull the trigger, what's the thing that you'd have to do first before you pulled the trigger on, let's have a look at this properly?
So having put the financials together, it works out that it's got a good ROI, and maybe I'll run through some figures quickly. There's could be far too many figures here for people to really remember and what have you, so I wouldn't worry too much about that. But the end result is that you end up with £204,000 left in the property after refinancing. And in order to get to that end point, you have to put in at the beginning about 350,000, because you've got a much bigger deposit to start with because of the lower valuation. You've got stamp duty, obviously. You've got your refurb money. You've got fees and normal purchase costs. And then you've got the bridge interest and things as well. And you've got the sort of general expenses while the refurb's going on. So paying council tax and that kind of things, water, electricity, etc. So with all that in, it comes out about 350,000. Looking at the 200,000, even that is probably more money. Well, it is definitely more money than I have at the moment to put into a property. So I could perhaps maybe remortgage one of my others, which I've been thinking about, and maybe scrape together the 200,000 if I really, really tried. But it's certainly not what I have at the moment, and it's not, or it is more than I was planning to put into property. So with that in mind, considering I then need 350,000 to actually purchase it in the first place and do the refurb, I can't afford it, basically. So I would need to be really convinced about this and then add in costs for private finance and go out and look for other investors to help with the purchase if I was to go ahead. And I think really that's, for me personally, that's the blocking point for me on this deal. The fact that basically I can't afford it. And if I could make it work, I would need to go out and find private investors, which is really not something I want to do at the moment. I know it's something that could be done, but I'm too busy doing other stuff to be putting much time and effort into that process. So that's probably where I'm stuck with this deal. If I wasn't, then I think my next steps would be to rework the finances based on some private borrowing, work out if they still could work. And I think they probably couldn't at the 700,000 purchase point, but perhaps they could at a lower purchase point. And then it would be to go and view the property and start poking around and having a look, talk to the agent, see if there is actually enough flexibility in the purchase price.
Yeah, because if that's the challenge, that's one of the things, based on my very limited research on this property, it looks like it's well overpriced and potentially is something where, it could be maybe not probate, but could be just be where, the previous owners have now left for whatever reason, and maybe people are just trying to extract as much cash from it as they can. So yeah, there could be on that end. Just one other thing I just wanted to pull up that you reminded me of when we were talking about unknown costs. The thing that came up before, particularly when you're creating more flats or more letting rooms, however that appears, is, for example, we had to upgrade the power, have to upgrade the services into the property. So that's a power supply issue from whichever network is providing that power. And that immediately made me think about the fact that then adds time. And, things like that, we had to beat our head against the wall. I mean, it took so much longer than I could have expected. And I thought, we can do that concurrently. It's fine. I'll start knocking rooms around and we'll do this, that, and the other. Meanwhile, the electric power supply, they're just taking forever. And actually, I had 1 month of down tools where we couldn't link up showers because they were electric showers. We couldn't do certain things. So we had 1 month where actually no one was doing anything because we couldn't safely do it. And they're the bits that you don't think about that add the time, because it's added a month on. And of course, you're paying someone to do that. And of course, like you said, because you talked about voids, or you talked about council tax, but it made me think of voids and things like that. They're costs that actually, before you know it, there's 10 grand right there that's just seemingly come out of the ether.
Yeah, because every extra month, the build process is ongoing. You're paying council tax, you're paying electricity, you're paying water, you're paying interest on your bridging loan, which is at a higher rate than normal mortgage would be or whatever. And perhaps you're paying an even higher rate to private financiers. So yeah, it's you really don't want to be overrunning. And actually that brings up another excellent point that, again, I'm not very experienced on, certainly the size of a project, but perhaps you are a bit more. I put in my estimate for 6 months for build time. That sort of feels optimistic in the current situation. Do you agree? Is that too short?
I nearly laughed when you said 6 months. Does that tell you?
Oh dear.
But the thing is, it is reasonable. Can it be done? Of course it can. It's just you need everything to line up. So, we talked about this probably in the very early episodes of the podcast, but I bought a house that was on 1/4 of an acre of land. Didn't look dissimilar to this one, actually. And my intention was simply to double the size of the house, build an extension, double the size of the house, make it a really nice big family home, because it was an old 2-bed cottage. It's the one that my wife and kids moved into when she was pregnant, but that's another story. So basically, I thought, yeah, we'll do this in 6 months. We just need to get planning. And I think we bought the property in July. We got planning the following March for that property. Now, that's not to say that's always the case, and this is a simpler project, but that's why I almost laughed, because that was one where, because of the time it took to get the planning permission, it was one of the where we were going into the council offices to meet with the planners to try and, obviously persuade them and, placate their fears and this, that, and the other. But the irony was for me on that was that I decided, because of the void, because of the money that we were just spending on not doing anything, I said, right, let's just refurb the house. We're just going to sell it as a better house than it currently is. The day that the builders gave me back the keys, when they finished the refurb, was the day that we got planning approval. So
absolutely typical.
So 6 months sounds reasonable, but then I think, for me, the first step on this is, before I would do anything, assuming I think, the numbers work, I can get the funds, I'd want to talk to an architect, and they would want their palms crossing with a certain amount of silver before I would do anything, or even a planning consultant to give us that confidence that we're not barking up the wrong tree.
Yeah, exactly. I mean, I talked about sort of the next steps following your earlier question, and talked about need to make sure finance would be in place, going and having a look at the property. Then, of course, I stopped at that point, and you're absolutely right. If you decide that you actually want to potentially proceed and maybe put in an offer, you've got to start having at least rough conversations with the people involved, so an architect and the local planning officers, so you have some idea whether it's even feasible. So, I mean, you don't want to be purchasing such a large property without any potential there. So I wonder if perhaps this is where you might talk to the vendor about some kind of delayed completion or some other sort of different purchase approach, so that you can be more certain of that before you actually fully commit.
Yeah, and this is why a lot of number of other strategies exist for that very reason. And dear listener, we will be wrapping up very soon. But just to finish up on that conversation, that is where we think about things like you've mentioned delayed completions or keys undertakings, or things where actually we're probably putting a foot into commercial land, because it's almost a subject to planning approvals, where you say, yes, we really want to buy it and this is the price, but there's a certain level of confidence. Whether you share all of that with the vendor is a different matter, but it could be that you say, look, let's rent it. I think my view, just to give you my summary of the very basic, is that it's tight. And I think the reason it's tight is, for me, is the third flat. And that it's the make or break, because obviously if it's not a third flat, then all of the numbers crumble immediately, unless it's something which you say, even at 2 flats. But of course, you're not going to create something which is worth less than you pay for it. So you need to be looking in the region of 600k before you'd consider it. So for me, the third flat, that is the key domino. And if that's not possible, then it's a no deal.
Yeah, totally agree. And sort of putting a dampener on that possibility is the property next door, which is split into 2 flats, not 3. And this is sort of the near identical property. So yes, I agree, that would be a concern.
And the reason that planning consultancy and an architect is the first step as well, because right back at the beginning, when you mentioned that, I think, yes, it is a good thing that there's a house next door that's been converted, but it's a double-edged sword, because equally it could be seen, well, we've already put an extra 2 house, we've doubled a household, so doubled cars, so would we want to do that for 3, another 3? And local residents, I'm sure they're going to have a say in all of that, and rightly so, as you and I would as well. So all of those things. However, we are going to leave it there, because we like to give you some time back in the day. Please do reach out to us. Let us know if you've got any thoughts, whether you think Simon is completely mad to even consider these types of deals. I personally find it interesting in terms of the ROIs and yields that Simon works with. Hopefully you do too. So please do reach out to us following the usual channels at Biz of Property. If you want to tweet us, we hang out there mostly. Otherwise, go to thebusinessofproperty.com, or you can find Simon and myself on LinkedIn. Other than that, we see you next week.